in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. From our studios in New York and San Francisco, our expert hosts data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss.
Middle of the week. Welcome
Watch
to
Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action.
We are
Live every weekday,
in a
only
position
on Bloomberg Television. Context changes everything.
We're actually just managing but I took partials on this
We're
short.
a $3 trillion bank. We are significant, so we can support clients in financing. That'll be debt capital markets and leverage finance and the global transaction banking. These are really amazing sort of jewel of the crown type of businesses and the ability to help clients navigate. So in the US, that's what we're going to be focused on, the global transaction banking and the financing. M&A and equities, we were less competitive. So I think, making sure that where we have strengths is where we focus.
And that was Lisa McGeough. She's the U.S. CEO of HSBC, speaking in her first TV interview since taking the role. Remember, HSBC is undergoing a global restructuring, and that includes job cuts across New York, London, and continental Europe. And that brings us to today's Wall Street beat. Because elsewhere in finance, Morgan Stanley plans to cut about 2,000 employees this month to keep a lid on costs. And Citigroup is slashing executive bonuses tied to the bank's turnaround. We're going to discuss it all with the best of Bloomberg Finance, Bloomberg Sally Bagwell, and Sridhar Natarajan. Sri, because you're also breaking this news in Morgan Stanley, the job cuts, yes, we're keeping the financial advisors intact, 15,000 of them, but M&A has not come back as expected. They want to keep a lid on costs and automation that start to eat into jobs. How significant is this move? We haven't seen one like this in a while.
It's the first major workforce reduction under new CEO Ted Pick. As I said, he's been in the job since the start of 2024, but they haven't had an exercise this large since he took over. Now, let's also look at some of the reasoning behind it. Unlike some of their rivals, chiefly Goldman Sachs, which has this military discipline of wanting to cut 3 to 5% of their workforce every year, Morgan Stanley does not do it. And yet, the fact that they're doing it right now does feed into the broader dynamic that yes, this might not have been a reaction to the market moves. These moves rarely are in reaction to 1 or 2 week move in stock market, or necessarily the pause that we're seeing in mergers and acquisitions out there. But it does speak to the idea that at some level, senior executives of the firm perhaps think revenue is not going to grow as fast as costs are growing, and this was the right time to keep a lid on those costs. And that's why you're seeing this action where they're planning to cut about 2,000 people from their workforce.
So that's about 2.5% of the total workforce, and they don't typically do the kind of culling that Goldman Sachs does on a scheduled basis. But usually bankers quit, right? They have attrition normally. Is this just something that Ted Pick has to do in place of attrition because they're not quitting this year?
Yeah, I think that this is probably a job environment where a lot of people don't want to face the uncertainty of trying to lose jobs or take another job at another Wall Street lender. And amid all the uncertainty over Trump's policies and now we have hearing increasingly how there is a sort of bounce back might not come back in M&A. I think it's a time to probably sit tight.
So there's the other thing going on at Citigroup too, and I wonder how much of these moves are bank specific. The idea that Citigroup is slashing executive bonuses that was tied to the turnaround. These are special bonuses. How big of a deal is that? Of course, these were very specific to Citigroup's turnaround, but does it also signal something about the discipline that is required from the banks in this environment?
Well, back office weakness has long plagued Citi. Just when you think that it might be out of the woods, you hear about another issue popping up. And just in July, they faced a $136 million fine from regulators over progress toward their data quality. And now we have just heard that their 3-year sort of bonus transformation plan, about 250 employees last year got about 68% of the target, which is the lowest of those 3 years. So I think that is an indication, along with a number we've heard of lately, that The revamp and this transformation, it's difficult, and it certainly evokes memories of some of the glitches they experienced last year. There were two occasions, one reported by us, one reported by the Financial Times, where they did or nearly did send money to the wrong place. And of course, then we had the Revlon issue in 2020 and the fat finger situation in 2022. So Citi, Jane Fraser, she acknowledges in earnings earlier this year that this was the middle point, the waypoint, and not the destination. They still have a lot of work to do, and that's indeed what they said yesterday in the filing about this bonus target.
I wish my bank would send me $81 trillion by accident. This is two down arrow stories.
From London, the London lows.
Firing 2,000 people at Morgan Stanley, bonuses getting cut at Citi. Are these indicative of what's happening across the industry? Is this banks turning down?
The lows from
it is them at least battening down the hatches. When you have the US Treasury Secretary go on TV and talk about the idea that corrections are healthy, you needed this, there's nothing to worry about. There is at least this telegraphed idea that you're not going to enter a period of exuberant stock markets. You already have a lot of bankers talking about these abrupt policy pronouncements, the flip-flopping on tariffs, and lack of clarity on what the ultimate destination is on that policy front, that is forcing deal makers to have a difficult conversation with their corporate clients, because corporate clients are on the sidelines. They're all on the 5-year plan, all talking about this extended pipeline of deals, but there is a massive pileup because people were not pulling the trigger on the announcement. And at some point, the pipeline gets whittled down, not because deals are getting done, because companies will then have to pivot away from the strategy of a merger to actually saying how they're going to improve their underlying business, and that's not good for investment banking either.
All right, Sri, great to have you on the program. Sally Bakewell, thanks for joining us as well. Our finance team there covering the firings at Morgan Stanley, the cuts in bonus payments over at Citi, and we're obviously going to keep our eye on Wall Street very closely. Shanali will be doing that as usual for you. I'm looking at the markets that are climbing a little bit, just 20 minutes into the session right now. We're looking at gains that are getting more solid, with the Russell 2000 now matching the advance that we see on the NASDAQ 100. So tech stocks really pulling us higher today, but the broader market doing quite well as we get ready for Jerome Powell's decision. We're expecting no change, obviously, from the Fed, but we will get a new dot plot, and we will get an answer to whether or not he feels like sharing his view on the changes that tariffs and deportations make in the growth outlook.
Yeah, certainly a lot to look forward to this afternoon. I do want to point out that as we get into the trade, one more bullish signal here is what is trading higher. So remember yesterday we were talking about defensive names really leading the way. In fact, today you have Infotech, discretionary, and not just Tesla. I mean, you have 40 out of 50 members of the consumer discretionary index higher. So a bid really back into some of the parts of the market that were a bit harder hit due to growth fears. Financials getting a bid, real estate getting a marginal bid, though it's pretty much flat. But staples, that was your defensive trade. Healthcare, your defensive trade, those are actually down.
Yeah, if you click into discretionary, consumer discretionary there, you'll see Caesars, Carnival, Royal Caribbean, Norwegian. So these are places that consumers had been less likely to spend, and I guess they're happy to gamble and go on cruises now. UBS strategists say the U.S. growth scare will not inhibit the global equity market. They see a 9% upside for the global index, so more growth globally. We'll talk more about that in our strategy of the day. This is Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl,
I
right?
can't wait. It's like opening presents in the morning.
Right. It will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sharon in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens.
We're way up.
In Rio de Janeiro, Brazil.
Way
this
up.
is Bloomberg.
And we have just taken liquidity, taken the buy side, all this liquidity.
And it's time now for our top calls. Some of the analyst action in focus this morning.
We are
First up,
bullish this
Tesla
morning.
getting raised to a buy at Cantor Fitzgerald.
When it came back above
the
our
firm
pivot
says
here,
the sell-off is a
when
buying
I stayed above
opportunity
pivot,
ahead of
it went
catalysts
up,
like
went
the
above
rollout
pivot
of robo-taxis
stayed
later this
above
year in
VWAP.
Texas. Tesla up 2.5%, getting a
this
breather
would
this morning.
been our
But next up, Oppenheimer is downgrading a number of financial stakes, including Goldman Sachs, which is no longer a buy.
200 points right
And the
there.
firm says there are no signs of an M&A rebound for the group.
All right,
Thanks to tariff
we
threats
can-
and trade uncertainties. You do still have Goldman pretty much flat on the day, but down on the year. Finally, Restaurant Brands, the parent company of Burger King and Tim Hortons, getting upgraded to a buy at Argus Research thanks to its growth potential. Matt, people are still going out to eat, it looks like.
Yeah, well, at least for now, we'll see what happens when prices start to go up for everything else. UBS strategists expect the MSCI World Index to climb an estimated 9% in 2025, saying preconditions for a bear market are not in place, and the growth scare in the U.S. can be balanced out by growth elsewhere. And I think this is the key, right? They're talking about the global index, the MSCI all-country index, and we've been watching this rotation out of U.S. stocks and into European stocks, as well as you can see the MSCI China is absolutely on fire there. So a lot of reasons given by Andrew Garthwaite and his colleagues in this note, but they say, number one, AI should boost productivity. I think it's interesting that they list that as their first reason globally.
Yeah, I also think that what's interesting as part of the trade is how much is poured into defense. You've been pointing this out since the very beginning. But if you looked at an S&P sector breakdown here of what's performing, Rheinmetall is performing well above everything else in that index. And now you start to talk about valuation once again.
The big
All right,
boys
coming up the next hour, Guggenheim's Jim Milstein joins us on the Fed, the economy,
they very
M&A,
well reached that
and much
today with all
more.
the volatility.
This is Bloomberg.
Once the Feds show up here this afternoon. So I got my ginger root, which is my breakfast. Ginger root with my coffee and some fresh garlic. The ginger root is very good for digestion, and I have pretty bad allergies when the spring comes. I saw all these beautiful flowers. I love looking at them from a distance. This ginger root helps me also with my immune system. With the allergies.
And Davos, you were asking a question of President Trump, and he
some natural remedies.
Might answer the question, and he asked you a question. So the question he asked you was something like, "Why are you not banking certain groups?" What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody.
Possible entries here.
Your question was about
this swing point.
Overregulation, frankly. And so if you look at what's happened, because the interpretations of AML,
so much room to go higher.
Secrecy Act, KYC, know your customer, know your customer's customer. There's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts. We can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes out.
RSI is showing
the crypto area with the
not much conviction in this. There's not much strength here for the bulls. And that's why it's pulling back.
But the operating company,
profit,
they said that's a high-risk activity.
You consolidate a bit more in still before it can make another move here. But
that came up as an issue. So at the end of the day, it's about getting these regulations right.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
U.S. equities across the board, all up. We are all up here, up to almost 2%.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Michael Wallace. Presidents Trump and Zelensky will speak by phone this hour as they try to come up with a ceasefire deal with Russia. Ukraine claims Russia attacked its energy infrastructure overnight, which Vladimir Putin had promised not to do during his call with Trump yesterday. CBS's Holly Williams met Olena Akuma, who is manning the air defense systems near Kyiv.
If Vladimir Putin says, yes, I agree to a ceasefire, but only if the US stops supplying Ukraine with weapons, would that be okay with you?
No, she told us. How can we believe Putin when our head is in his mouth?
Pardon me a minute.
The Trump administration has until midday to tell a judge more about the plane loads of Venezuelans it deported over the weekend. The administration claims the flights were already out of U.S. airspace when the judge blocked those deportations. President Trump still wants that judge impeached. He told Fox,
"We're supposed to be getting them out or getting them brought to justice." We had a judge, I would call him a rogue judge.
CBS's Christopher Cruz reports the president has fired 2 Democratic members of the Federal Trade Commission.
The commissioners say their removals are illegal and they'll challenge the president's actions in court. The Republican chairman of the FTC said he believes the president has the authority to fire commissioners.
Correspondent Caitlin Huey-Burns is part of the CBS team going through the thousands of newly released documents related to the JFK assassination. She tells us so far there are no big revelations.
David Barrett, a professor of political science at Villanova University who studies the Kennedy presidency, says that while these files are not a smoking gun, they provide government transparency.
Maybe it will lessen the suspicion that the FBI or the CIA or some other government leader agency were involved in a plot to kill Kennedy.
CBS's Nancy Chen reports a new study is raising concerns about the safety of some baby formula.
Several formulas were found by Consumer Reports to have some harmful contaminants, landing them in the worst choice list. 8 were found to have exceeded their determined daily limits of inorganic arsenic, a known carcinogen.
Another new study finds most treatments for back pain don't work. Aidan Cashin is with Neuroscience Research Australia.
What we find that may be effective are non-steroidal anti-inflammatory drugs, also known as NSAIDs. And really, on average, they have around a 4 point out of 100 reduction on pain.
Says the best treatments for back pain are exercise and rest. Stocks have opened higher. Dow's up 219. This is CBS News.
Refueled itself. Boom. They're so bullish today.
A centuries-old tradition south of the border has been banned.
Lawmakers in Mexico City have voted overwhelmingly to outlaw violent bullfighting. The legislation, supported by President Claudia Sheinbaum and animal rights activists, limits the time a bull can be in the ring, and matadors will only be able to use their capes to egg on the animals. No spears, no swords. A statement from the city's bull ring operator calls the decision a clear threat against one of the most deeply rooted cultural traditions in Mexico. Spanish conquistadors spread bullfighting throughout Latin American colonies in the 1500s. Deborah Rodriguez, CBS News.
2023 was the first year in which women 40 and older gave birth more than teenage girls did. Researchers suspect women are waiting longer because of the economic burden of child rearing, and more younger women are attending college. Michael Wallace, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Wednesday morning from the Bloomberg Interactive Broker Studio in New York City for our worldwide audience. We're also streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. You'll even find John Tucker on there as well. So how good is that? Coming up, we're going to check in with Bloomberg Intelligence Senior Tech Analyst Mandeep Singh. NVIDIA had an investor conference here, a developer conference, and Mr. Huang, the CEO, had a speech yesterday hoping to revive some of the hype around AI. We'll see how that played out. Carol Pepper, founder and CEO of Pepper International, give us her market call right here. Michael McKee, Bloomberg International Economics and Policy correspondent. He's down in Washington, D.C. for the Fed meeting today. We'll get a preview of what we may hear from Fed Chairman Jay Powell later today. Shelley Maggott, Deputy Director, Eurasia Center at the Atlantic Council, to recap the Trump call and where we go from here as it relates to Ukraine. So a lot coming up in the next hour. We'll kick it off with John Tucker and the Bloomberg News.
All right, Paul and Alex, this Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 70.3 in March 2025? At IBKR forecast trader, the S was recently at 29%. Check the data, spot the trends. Start predicting today at ibkr.com/forecast. 9 of the 11 major industry groups in the S&P 500 higher right now, and it is information technology in the lead. You have Apple shares, they're up 2.7%. NVIDIA's up 2%. Microsoft up 1% right now. And the parade of earnings continues. The maker of Paul's favorite cereal, Lucky Charms, General
Is that because
Mills.
he's Irish? I just wanted to clarify.
Yeah,
Okay,
I
cool,
think
cool,
they
cool.
got that. Sales declined more than expected. They also cut their forecast. Fed Day, of course, Gennady Goldberg at TD Securities says, you know what, investors
More liquidity
they set
building up
themselves
here.
up for a disappointment from the Fed today.
This buy side liquidity
The
building.
market is so much more worried about growth than inflation right now. I mean, we're all talking kind of stagflationary impulses here. I do think the Fed, if they face any sort of growth slowdown, will be pretty quick to act. But I think at this point, they're going to pour a little bit of cold water on the market's expectation that they're going to come in, effectively tomorrow and start cutting interest rates.
Morgan Stanley planning to cut about 2,000 employees later this month. The move aimed at keeping a lid on costs. S&P 500 up 43 points, up 0.75%, 56.57 on the index. The Dow 218 points, Nasdaq 100 up 183 points. And to see this headline from Bloomberg Intelligence. Tesla used car prices fall off cliff. Rapid price cuts, expanding supply of off-lease cars at Hertz, Avis, and other rental companies cutting their losses, and consumers ditching their Teslas, in part from Elon Musk fatigue. That means that cheap used EVs can be found, such as a 2020 Model 3 SR AWD all-wheel drive for $12,000.
What?
According to Inside EVs.
Whoa, that is really cheap.
So if you're in the market, well, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex.
All right, thanks, JT. Alex Steele here alongside Paul Sweeney. Welcome to Bloomberg Intelligence Radio. Happy Wednesday. Happy Fed Day. Market Drivers is brought to you by us. Actually, we're giving you Market Drivers right now. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Natalia Knežević joining us. Now, what stocks are you watching? So let's start, guys, with General Mills, because I think it's an important mover, not a huge one. The stock is down by 3%, but it's a good representation of consumer staples segment and sector, which is in focus right now. So the company cuts its guidance for 2025 sales. Initially, expectations were for sales to rise, but now the company expects them to fall. And more importantly, the management said that this outlook doesn't include any impact for tariffs in 2025. So this is just another confirmation of a slowdown in consumer demand. We also heard from Walmart, Kroger. Some companies are saying also that consumers are becoming more picky. Promotions are not as effective as they were before. And as I mentioned, consumer staples, it's one of the best performing sectors right now. Lots of institutional investors, if we talk about positioning, piled into this sector. But now, if we keep seeing those signs of consumer weakness, potentially we will see a rotation out of the sector. And then you're also looking at Tesla. Walk us through what's happening with the stock today.
Too high.
Yeah, so one of the recent news that we followed today is, of course, this upgrade from Cantor, and analysts are saying that the recent decline in the stock, by the way, is down by about 4% year to date. Implies a really good entry point and opportunity to buy the stock. He, of course, cited introduction of robotaxi, rollout of full driving vehicles in China. And so for these analysts, this is a good opportunity. But of course, we know that there are so many headwinds when it comes to global demand, not just for Tesla, but for Tesla specifically and other EV makers. One interesting point that RBC analyst who was on Bloomberg TV earlier today, he said, based on his conversations with many analysts, car producers, they are also not including impact of tariffs for their forecast. So we may see more headwinds for the company.
I wonder when that comes into, I guess maybe April 2nd, companies will get a better idea of what the tariff situation will be, and maybe we'll start seeing that in some of their guidance, I guess.
Right, and then part of it's also going to be the macro versus actual execution that General Mills has on its own. Excuse me, that Tesla has on its own. General Mills, I meant back. Okay, wrapping it up here with Signet Jewelers. Yes, shopping. So we see that the stock was up sharply today. The company said that sales are recovering from the disappointing holiday season, and the company, of course, blamed some inventory issues, and they're trying to address them. It's also important that the company is trying to reduce its reliance on stores, big malls, and it's trying to redirect those sales to online sales. One thing that caught my eye is, of course, the company is trying to gain momentum and increase its share in lab-grown diamonds. I don't know if you guys saw them, but I was checking prices just out of curiosity. So you can buy 1 carat diamond for like the price between $200 to $600 versus like real diamond, and the price ranges from like 2 to 10.
Would you accept a lab-grown diamond?
Yes, I would. Why not? Yeah.
You as an engagement ring.
Yeah, but I don't care about that stuff.
You?
She wouldn't. About it. She wouldn't. But I think it's the future, actually. It is the future to some extent.
All right, Natalia, thank you so much. We learn a lot here. Natalia Knežević giving us the stocks on the move here today. Yesterday was a big day in the world of technology. Jensen Huang, CEO of NVIDIA, presenting at their conference out there. And some people were looking at it as maybe an opportunity to kind of reinvigorate this kind of AI trade a little bit out there. Mandeep Singh joins us here, Senior Tech Industry Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. Mandeep, what did you hear from Jensen Huang yesterday? Dan Ives calls him the godfather of whatever. How did it go? What did he say? Did it move the needle at all?
I mean, look, he has been consistently talking about the data center build out being a $1 trillion opportunity. And yesterday they showed the roadmap in terms of the next version of their processor, the GPU chips, and really through 2027. And to an extent, it was quite reassuring to hear that there is a lot of demand, And they acknowledge, I think, that there's a pivot towards inferencing and scaling at the time of inferencing, and the focus was on reasoning.
We can come back
in
to
terms
this,
of how the next
swing
version
point
of the
down
processor
here.
is
That would be our
40x better
discount.
in terms of performance. But
Enter
net, I
along.
think very reassuring on the demand side. I know
It's
a lot of
just,
people are trying to
price is
draw
too high right
parallels
now.
to 99 and peak Cisco, but this doesn't look like one of those. And look, it could still mean the stock doesn't get a big lift from here, but at the same time, AI demand is real, the data center build out is real, and that was the key takeaway.
Why didn't the stock then move? Does that say more about the macro environment or what?
I mean, look, the tariffs are a big overhang when it comes to just the level of uncertainty that is out there when it comes to the impact, whether it's on the margins or overall demand. And look, a company like NVIDIA talks about all kinds of end markets. So it's not just the servers, which is the most tangible portion, but also humanoids, self-driving. They announced a partnership with GM. This is not going to move the needle. And when tariffs create uncertainty, the markets or the end markets that are going to get hit are these humanoids, self-driving, where no one exactly knows the use case. So if there is uncertainty, you're going to focus on the things where you see a clear ROI, and data centers and servers is one of those markets. So I think the optionality goes away for a company like NVIDIA, because right now you're just measuring them on how much data center growth will be in 2026 and 2027. And if they don't accelerate, then why would you pay a premium multiple for that stock?
And what are tech companies, just on average, I know there's not an average tech, but is there any consensus coming out of their comments at conferences or whatever about the world we're in right now with all this tariff talk and all the uncertainty that it generates? Because we had the CEO of UBS say his deal calendar is just frozen. His clients are doing nothing.
Yeah.
What are you hearing from some of the tech companies?
I mean, so far, based on our survey work and whatever we have heard from different calls, the server data center side seem to be somewhat insulated. And look, for automakers, this tariffs will have an impact. I would be very surprised if there is no impact. But what it does, the macro uncertainty is for, segments like digital ads. This is so discretionary that when you see a macro slowdown, you will see an impact on Meta and Alphabet, calling out ad spending is slowing down. And I feel we are sort of getting to that point where the uncertainty will affect the discretionary segments of the market.
When we take a look at all the different chips that are coming out, the cycle seems really tight right now. Does that cannibalize their margins? Does it cannibalize their demand of those older products? Does that actually make it more difficult?
In fact, it's funny you say that, because he said the Blackwell chip right now is in full production, and it's 3 times more better than their prior version, the Hopper chip. And he was like, I'm ready to give Hopper for free to the customer. So imagine if you're a customer and they ship 1.5 million of those chips in the last 12 months. If you're sitting with Hopper chip, he's saying this is useless. I'm willing to give you a better chip, 3 times better performance, and I can offer that for free.
Their sales team and the CFO is like, shush, cut his mic. All right, Mandeep, thanks a lot. Mandeep Singh, Bloomberg Intelligence, Senior Tech Industry Analyst, joining us there. All right, coming up, we'll break down the market trade into the Fed with Carol Pepper, founder and CEO at Pepper International, and Mike McKee, Bloomberg Economics and Policy Correspondent, will be joining us from Washington, D.C. He'll be in the room. He'll ask the questions. Yep. Is it weird that, I kind of feel like this is going to be a nothing burger?
Yeah,
can I say that?
I think you can.
All right, this is Bloomberg.
have a shorting opportunity here because it's failing to stay above the V line from the liquidity level. Here.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Hey, attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Tech-led rebound for stocks this morning. Of course, it could all change depending on what we hear from the Federal Reserve and Chair Powell this afternoon. Right now, the S&P 500, 41 points higher. That's up 0.75%, 56.55 on the index. The Dow Jones Industrial Average up 232 points. Nasdaq 100 right now 173 points higher, and that is up 0.9%. Yields pretty steady right now. The 2-year unchanged, 4.08%. The 10-year yield, that's 2 basis points higher. That is at 4.30 right now. Ice cream news. Ben & Jerry's.
Listening.
Yes. Ben & Jerry's accusing Unilever of firing its CEO, David Stever, due to disputes over the ice cream brand's social mission.
Oh, I thought we were introducing a new flavor. Well, you brought some for the team.
Yeah.
Neither of those were true.
And shopping news, a bankruptcy judge has given Forever 21 permission to start going out of business sales at all of its 354 stores. Managers are still going to try to find a last-second rescue for part of the clothing chain. They filed for protection for creditors on Sunday. That's like kids, right?
I've never been in a Forever
21. Oh, yeah. So Forever 21 was actually felt high-end when I was really poor and in my early 20s. So let's just, phrase that. Like, that's where I would go and, spend the $30 in the top if I was going to go out. But so take that for what you will. Yes, it is for the young kids.
Changed, John.
Young kids, and it's not like this is necessarily tremendously well-made or upkept material.
Oh, well, there you go.
Yep.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. When Mandy Singh was just here, I asked him, what are the tech company CEOs saying about tariffs and will they be impactful? Well, on another network, NVIDIA CEO Jensen Huang says, quote, tariff impact will not be meaningful in the near term. So that's one tech CEO is in that plays out. Let's talk about these markets here. What do we do here? Where do we go? Carol Pepper, founder and CEO of Pepper International, joins us. Carol, thanks so much for taking the time here. It's been a crazy 2 months here. I guess probably the word of the of this period has been uncertainty. And as we've been told time and time again, markets don't like uncertainty. What are the conversations you're having?
We do end up coming back to take this high.
Yeah, well, Paul, as you know, I manage money for family offices and people with over $100 million, and they don't like uncertainty either. None of us do. So the conversations are around, when do things bottom out? When do we come back in? But I would say that right now, a little motto we have is cash until clarity. Let's wait until we see what's really going to happen with tariffs. How many of these bold initiatives are going to be implemented before we jump in there. Because I think that's why you see the market so hesitant, up one day, down the next, volatilities come back, because people just have no idea what to make of what's going on and how far it will really go and how long it will really last. Perhaps when we get to the second week of April, we'll have a better sense of what's happening with the tariffs, and that may help us make better decisions. But right now, it's no time to be a hero. Nobody can figure this out. So your best bet, if you don't need to be investing, is just wait. Go buy some gold if you want to do something speculative. You'll make a few $1,000 while you're waiting.
So, Carol, to that point, are you selling stuff to then be in cash, or just sort of not putting to work that cash that you already had on the sidelines?
Well, for families, it's about the tax position in any position that you own, whether you can or should sell or not. If you've owned things for a long time and you're comfortable long term, it'll be fine. You don't need to sell. But it's a question of not necessarily going in with new cash right now. Wait until a better entry point. If things are going to get a lot worse, you'll have a lower entry point. For example, you see people bought some NVIDIA yesterday because it was down quite a bit for really no reason. And even today on Fed Day, it's popping up a bit. So you can be careful with your entry points.
Carol, a popular trade or positioning over the last several years has been, technology, particularly as it relates to AI. And again, Jensen Huang, the CEO of NVIDIA, yesterday was out with a very bullish speech at his developer conference as it relates to AI. How do you and your clients think about that AI story, that tech story? Can that still be a leading driver of this market?
So let's see, where's our
I think it will be a leading driver of the market over the next 10 years. I think right now, the short-term market, let's say over the next 3 to 6 months, until we see where all of these initiatives from the White House pan out, it will be a tail rather than the dog, rather than the dog wagging the tail. So, but if you're looking for long-term investing, this is another one of those stocks like Amazon, where and Microsoft, you just pop it in your retirement plan or in your kids' college saving plan or in any long-term foundation portfolio or somewhere you're going to hold it for a number of years. Set it and forget it. It's a leader and it will continue to be a leader.
On
the flip side, many are starting to discuss the fact that we're actually seeing a tectonic shift in how global liquidity is allocated. That it's going to be much more bring your capital home, which would mean by extent, there's so much foreign money in U.S. stocks that could mean a ton of selling in U.S. stocks. Do you guys subscribe to that view?
I don't know if it'll be a ton of selling because, again, yes, right now people are sort of annoyed with all the tariffs around the world and they're, don't buy American. But if you take a cold, hard look at it, there's still no country out there in the world that is as powerful militarily or as stable as the United States. So, again, wealthy families are very pragmatic. They're not particularly focused on their borders, and they're the ones who drove a lot of the overseas investing from non-U.S. people coming into the U.S. I don't see them divesting necessarily of the U.S., but I do think, other markets are starting to look interesting. Obviously, people have talked a lot about the European defense stocks, what we could do in Europe. Europe still has the same problems they had 2 months ago before the tariffs were announced. Hard to get them together, hard for them to make decisions. A lot of things hobble Europe from making big moves toward growth. But I think they are going to put their money where their mouth is and start, defense as a sector will do better in Europe. If you're into property, the place to go right now is Dubai. That is the hottest property market in the world, I think, right now. It reminds me of New York in the 80s and 90s before things fell apart. So, there will be other parts of the world that will catch fire for certain sectors. But in terms of general overall flight to safety, it still will be the United States, I think, at this point in time, unless something really drastic happens, which I hope it won't.
Almost,
I hope we will not destroy all of the goodwill we have globally because we're still seen as a global leader.
Partials.
Carol, thank you so much for joining us. Always appreciate getting your perspective on these markets. Carol Pepper is the founder and CEO of Pepper International. Let's get right over to Michael McKee. It is Fed Day. And again, complete coverage starting at 1:30 p.m. on Bloomberg Radio and Television. Tom Keene, John Farrell, Lisa Bromwitz will bring that to you. Michael McKee, international economics correspondent for Bloomberg, is in D.C. He will be at the press conference. I'm going to quote Alex Steele here from earlier, Michael McKee. "Quote unquote, she expects it to be a nothing burger today, or could very well be a nothing burger today." Is that how you guys down there in DC are thinking about it?
Okay.
Well, essentially, that's the way everybody's coming at it.
And now
Wall Street, because we're in the waiting period. We're in the waiting period for Donald Trump right now.
So either way,
to see what he does with tariffs, and that's not due till April 2nd. So
I have just trailed my stop loss
decisions about what it should or could or must do until then. So for now, they're probably going to do as little as possible because they don't want to get involved in anything political, and they also don't want to move any direction that could turn out to be wrong. They'll watch what happens, but Jay Powell will probably say we are going to react to what happens to the economy as opposed to what we think might happen going forward. So no change in the statement, really. A few minor words, probably still two cuts on the dot plot. And
too long on a
do you think we're going to get revised inflation higher and growth lower and employment rate higher?
Well, the growth lower is something that they could easily do because we're already seeing signs that the economy is slowing, and they had forecasts in their last SEP that growth would slow down. So that they could do, and just point to some of the data that we've gotten recently. Inflation is a bit tricky in the sense that CPI has come down, PCE is going to go up a little bit. And their argument has been that inflation is moving towards target. So it'd be a little harder to explain if you didn't bring in, if you didn't say because of tariffs. So I don't know if they're going to do that or not, but we'll find out.
Taking that out eventually.
So what could be a mistake later on today by Fed Chairman Powell? He's been very good, I think, at just kind of
it looks here
talking the talk and then not getting himself into the Fed in trouble. Sellers. What could be a mistake? Would it be
or just
strong commentaries on tariffs
at this level? So
well, that could be one thing. I think he'll be well prepped not to do that. What he might do that Wall Street might take as a sign of something is say something like he said before, which is the Fed is well prepared to do whatever it takes to keep the economy on an even keel and inflation moving down.
We're up now.
Maybe that would be taken as something of a Fed put.
One loss here.
Sort of a chorus on Wall Street of we're missing the Fed put. And maybe that might move markets in a way that the Fed isn't particularly appreciative of. But the less he says
the
for
entry
him
here.
For the Fed at this point, the better.
Mike, do you know what your question is yet? So for those of you who don't know, Mike always asks that question. Like, I'm not selling a bill here. Like, people do their notes and the economists send their notes out and they always wind up quoting the answer to Mike's question. Do you know what it is yet?
I've told people that I could ask my sort of all-purpose question for the Fed, given what's going on these days. You just stand up and say, Mr. Chairman, what the? Yeah. Beyond that, we obviously want to ask about whether they feel they're going to be able to get ahead of any adjustments in the economy because they just don't know what the president's going to do. Now, they might announce that they're pulling back, pausing temporarily the QT process because of the debt ceiling. They hinted at that in the last minutes. Whether they do it this meeting or the next meeting, that might be coming. So there'll be questions about that, but it's not particularly controversial.
All right, Michael McKee, thank you so much. We appreciate that. Michael McKee, International Economics and Policy Correspondent, Bloomberg News. He's down in Washington, D.C. for the Fed meeting today. Again, the statement comes out at 2 p.m., press conference at 2:30. Bloomberg's coverage with the Bloomberg surveillance team, Tom Keene, John Farrow, Lisa Bromwitz, 1:30 p.m. Wall Street time on Bloomberg Radio and TV. So got you going.
Well, this also raises the question, too, is everyone, and I mean investors and the Fed alike, going to be on pause until April 2nd? I did a chart on TV yesterday that looked at the VIX index, and you type in CCRV Go, and that shows the curve. And if you compare it to today versus a month ago, the re-rating from now until May and how much higher investors expect the VIX to go is huge. Yep. Like, is that going to be the event? And until then, do we just tread water?
We guessed on Bloomberg surveillance this morning a derivatives guest, I can't think of which one it was, who, or Dean Kearney from Macro.
Yes, Macro Risk
said basically the new range for the VIX, the new normal might be instead of 15, 16, it may be 22, 23, 24, something like that. That might be the new normal. And when you price out some of these derivatives trades, that's what these traders are starting to think about as they price for the risk protection going forward. So interesting stuff.
Yeah, and also we get options expiry next week also, and that will wind up potentially moving day-to-day market flows. All right, much more coming up. This is Bloomberg Intelligence. Happy Wednesday.
coffee here is kind of gone stalemate. It's just nothing worse than room temperature coffee, so I'm trying to get some hot water. Be right back.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
What they say, best part of waking up is
Happy Fed Day. Gains in stocks being led by the mega
black
caps
cup of coffee in
Tesla
your cup.
and Nvidia right now. Shares of Tesla, 2.75%. Nvidia shares
Best part of waking up
4% right now.
is
A TSMC board member
black
dismissed a report
coffee.
that the chip giant has pitched to major
roast.
U.S. chip makers like Intel about
In your
taking
cup.
stakes in a joint venture. Now, as a result of that, you have shares of the Intel going the opposite direction. Right now, down 6.4%.
If you like robust,
Shares of
strong coffee,
NVIDIA, the most active
Vietnam
right now.
coffee is the
Again, those
best.
shares up 1.4%. NVIDIA
That's
CEO
right.
Jensen Huang's keynote address at
drink.
the company conference yesterday, that was kind of met with indifference. But Dan Ives at Wedbush Securities, he still remains
It'd
bullish
be
of the
expensive
stock.
to
This is
import
a
them,
stock that's going to have a chew in front of it over the
Still
next
got some
9,
left
12
in.
months. And that
It's
continues
so
to be
worth
the buying opportunity. I think the street is sort of
Vietnam would be my
misinterpreting
number one choice.
what I believe is just so bullish in terms of the
Second one
long-term
would
outlook.
probably be Colombia.
Among some of the other company
Third
news,
would be
Boeing
Brazilian.
has seen cash flow improvement this quarter. Shares of Boeing right now,
Gotta have my
they were up
coffee in the morning.
6.5%.
Oh, wow.
Morgan Stanley planning to cut about 2,000 employees.
Looks like we are
This is a quote
about
by Those shares up 0.5%. And General Mills cutting its sales guidance. GIS is the ticker symbol. Those are down right now 2.2%. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul, Alex.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Well, later on today, Ukrainian President Volodymyr Zelensky will speak with U.S. President Donald Trump following Trump's conversation with Putin that lasted nearly 2 hours on a ceasefire yesterday. Now, Steve Witkoff is a White House special envoy to the Middle East, and he joined Bloomberg Surveillance this morning. And when asked about a ceasefire between the two countries, he said it is very likely to happen.
What was agreed between the two presidents was, and it was at President Trump's suggestion, that there be a cessation of attacks on energy infrastructure from both sides and civilian infrastructure for that matter. Also, working towards a Black Sea moratorium on hits on naval vessels and freighters carrying grain and things of that sort, and ultimately that would evolve into a full-on ceasefire.
That was Steve Witkoff, White House special envoy to the Middle East. Let's get more perspective on this with Shelby McGee, Deputy Director of Eurasia Center at the Atlantic Council, joining us now on this. Lots of questions to unpack here, Shelby, but based on what we saw overnight in terms of some attacks on energy infrastructure, what did you make of where the ceasefire is and where the reality is?
I get feeling that.
Thank you. I'm glad you mentioned
come back to this VWAP, and
those are Russian attacks. Russia sent over
doesn't necessarily
150 drones and hit Ukraine, including taking out the power in one city, hitting hospitals and other infrastructure. So what we're seeing is that President Trump yesterday said, and he posted on True Social, that there was an immediate limited agreement for a ceasefire, and that would cover energy. And I'm not sure how immediate that is, because as we now see, Russia immediately violated it. They might say that this will be agreed on later, looking at how to actually enact this and execute it in the talks in the Middle East with the U.S. and Russia. But unfortunately, I do think Witkoff's assessment of the call and the situation is a bit optimistic, though we are moving in the direction where we could see a ceasefire, but it doesn't look like Putin's overall goals and demands have changed.
Shelby, as we sit at this stage here, at the U.S. / Ukraine on one side and maybe, I don't know, Russia on the other, where's the leverage right now, do you think?
So, of course, the U.S. has leverage, and we saw President Trump using that leverage against Ukraine, and that was a painful roller coaster, but I think we're in an okay position there right now. But Trump also threatened recently that there's still more leverage and pressure that he can put against Russia. There is more economic pressure that we can do with increased sanctions, and I believe Senator Lindsey Graham also is preparing a package of legislation that could put that pain on Russia as well.
What do you think the conversation is going to be later on today when Zelensky and Trump wind up having this phone conversation in light of the last 24 hours?
I'm glad they're speaking. It's really important that Ukraine is not left out of this conversation, and it's great that President Trump is taking the time to speak to him immediately. I imagine that President Zelensky will point to the Kremlin's readout of the call, which differed from the White House readout. The Kremlin's readout reiterated many of these maximalist demands that Putin has that are red lines for Ukraine and truly would be existential threats to their security. So Zelensky will point to that. He'll talk about the damage that Ukraine saw overnight, but Zelensky will also smartly thank the U.S. for the continued engagement and support, and also talk about Ukraine's willingness and desire for peace, because as we've seen, Putin and Russia are the obstacle.
So I guess just yesterday's call, some could read it as a disappointment that Russia did not agree to the ceasefire as Ukraine has done. Do you read it that way?
I am not surprised. I am disappointed with everything that Russia does, frankly, but I read it as positive, neutral, or slightly positive on the U.S. side, and that is actually more important because we did not see President Trump move away from support for Ukraine. We did not see him bend to many of these demands from Putin. And on the Russian side, they're stalling for time. President Putin is very good at playing people, and so I hope that Trump does not get played.
Well, to that point, what was interesting is that Steve Witkoff, the White House special envoy, said that we're going to trust Putin and take him at his word. What is the history in that happening?
The history is that you should never take Putin at his word. So again, as I said earlier, that's an optimistic take. Of course, you need to listen to what Putin is saying, but you also need to look at his actions. As for the history, Russia has violated ceasefire agreements with Ukraine. I don't know the exact number of times, but I think it's in between 100, 200 times over the Minsk agreements. And they continuously act aggressively, even after they say they won't, and that they want peace, that they care about saving human lives. And Putin has shown he doesn't even care about the lives of his own soldiers.
So I guess, White House Special Envoy Witkoff did say that the ceasefire could happen in a couple of weeks. Do you share that timeline view?
I think that could be realistic. It depends on what the U.S. continues to push on Russia. I do think that Putin and the Russians are hesitant to completely say no to Trump and risk hurting their warming relationship and angering him. So a ceasefire, there's a lot to work out on the technicality side. Ukraine is not the holdup, so we'll have to see. But I'd say sooner than a couple of weeks does not seem likely, but a lot of discussions can happen in a couple of weeks. So maybe.
Maybe. It doesn't sound like you're particularly optimistic necessarily. What role, if I'm paraphrasing you, what role do you think that Europe will be playing in this? Because we make a lot of hay about Germany expanding its ability to reindustrialize and rearm, but all of that's going to take a while. In your estimation, what does that part of the story look like?
That's a good question, and you were right in your paraphrasing of me. I'm not overly optimistic, but I do feel better when I look at the European angle. I don't see a European role in the upcoming negotiations on the ceasefire, which I think is a mistake because they have a huge stake here. But what has been great is that while the catalyst was unfortunate, following the Oval Office blow up with Trump and Zelensky, Europe really stepped up their commitment and their action, and we see a lot of progress, and they're trying to do more than just words and meetings. So we see movements about this idea of a coalition of the willing. That would be European forces to go in after a peace agreement. Of course, we're not there yet. We see more commitments on European defense, and the moves in Germany are really important. And this all adds up to signs and signals to Putin too. So I think it all is positive, but we might not see the immediate effect.
All right, Shelby, thank you so much. Really appreciate getting your thoughts here. Shelby McGee, Deputy Director, Atlantic Council's Eurasia Center. We had a guest on, when that news broke a couple of weeks ago of Germany stepping up its spending. And the guest said, and who was a European-based guest, I can't remember who it was, said Germany can do that because they can afford it. Poland is likely to do it because they are right on the border with Russia. So they've already been spending money. They actually have. But everybody else in Europe, a tough time making the argument that they, in fact, can make the type of investments that Germany's talking about.
Or borrow more money.
Yeah,
I mean, that's what Germany's going to have to move its deficit and budget restrictions. Other countries would have to do something similar. All right, much more coming up. We'll break down the markets. This is Bloomberg Intelligence.
Let's take a look at the calendar, shall we? Interest rates. How much that cut interest rates by this afternoon? The Bank of England interest rates on Thursday. 8 for the pound. Speaking on Friday. That's the rest of the week. That's the outlook. Beginning of this week.
You're listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our Interactive Broker studio right here in Midtown Manhattan. One story that caught my eye today actually had to do with private equity firms. And private equity firms getting rid of their equity and the liquidity in the market, always a big question, but even more so now as the IPO market and the M&A market kind of goes nowhere fast. Claire Ruckin is a Bloomberg News senior reporter, and she joins us on in this story. Claire, we were kind of waiting for the private equity guys to like offload all their stakes in companies this year. Is that happening?
It's not happening at the moment. There's a bit of sign of life, but it's nowhere near where they wanted it to be. And so because it's nowhere near where they wanted it to be, they're having to get creative and do other types of deals in order to try and show some returns to shareholders. And that's via dividends. They're loading their portfolio companies with debts, and they're taking it out as a dividend to show some sort of distribution.
What are the lenders saying here? Because, I mean, this is a dividend recap. That's what we used to call it back in the day here. And that's not the type of loan that you generally like to make. But it seems like lenders are going to step up here.
Yeah, so we're still calling it dividend recaps. They're happening quite a lot. If you look at like where deal flow is coming from, you've got a lot of like refinancing of existing debt, and then you've also got these dividends now happening. It's like the next stage on because the debt markets are so hot. So there's been a record level of inflows into credit funds and collateralized loan obligations, which are the biggest buyers of loans, and they're desperate to put their money to work. And because there's been a lack of M&A and a lack of like new places to put this money, sponsors have been able to get creative, that's private equity firms, and they are doing dividend recaps. So they're adding debt onto companies and taking it out in the form of dividends. And this is something that investors traditionally don't like because obviously you're piling leverage onto a company, and it's something that's usually a no-go. But because the debt markets are so hot at the moment, they're like, yeah, this is great. It's a new place to, put new capital. And so they're giving the go-ahead to them, basically. So we have seen quite a bit of volatility hit the market at the moment because of Trump and tariffs, and deals are starting to get pulled. But the ones that are not, the dividend recaps.
So usually when we talk to private equity guys, they're like, look, like you're locking in your money 5, 7, 10 years. It's going to be fine. We can manage any sort of big swings and volatility. Does that still ring true, or are we seeing some issues here? When liquidity tightens up, it gets harder and harder to find ways around it.
Yeah, that's right. They are having some difficulties. They're having difficulties showing those exits. So whether it's via the IPO market or the M&A market, they just haven't come back yet to the level that they would have wanted. We are seeing some deals happen. So Walgreen Boots was a massive deal. It's most probably one of the biggest LBOs since the financial crisis. And that's something that banks have piled into, and they feel confident that they can sell down to investors. But those mega deals are few and far between. We might see some more deal flow happening in the second half, but it's not where people would have wanted it to be. And therefore, private equity firms are having to get creative. And investors are holding their noses and buying in, basically. This isn't the type of deals that they would have liked. In essence, you are piling debt onto companies, you're increasing leverage, but it is an opportunity to invest new money, and therefore they're doing it, even if that means that the existing debt is getting refinanced at a lower rate, and therefore they're getting a lower return on their money.
Claire, one of the key variables in these types of deals is what kind of return does the equity investor get paid here on this dividend? If this person, an investment firm put in $1 and I loan them money for a dividend recap, do I value that dollar at $1, $1.50, $2, $3? Are they getting returns when they get these dividend recaps?
It depends. It depends how much they're able to take out. I mean, Clarios is one of the biggest, most recent examples. It's the biggest dividend recap that we've seen in a very long time. They raised 4.5 billion of debt, and they took all of it out as a dividend, and they got 1.5 times return on their equity. And we are seeing other companies come back, and they're issuing, not just one dividend, but it might be their second or their third time that they're doing this. Mm-hmm. So in some instances, they're just getting their initial equity return or reducing the amount of equity that they have in a company. But in other instances, they're getting all their equity back, if not more. And the debt markets are allowing for that. There's a lot of money out there that needs to be invested, and this is a place where they can invest it. So there is a caveat. It has to be for most probably a strong issuer, a well-known company, with a borrower that they know, and a private equity sponsor that
more liquidity has been generated here.
Really great reporting. It was such a great story. I recommend that everyone read it on the terminal there. Again, it's about private equity firms getting rid of their equity. Claire, thank you very much. Claire Reckon, Bloomberg News senior reporter on this story. Here's my uninformed question.
Go.
Does this hurt their fundraising ability later? Like, do people get skittish and want to go somewhere else, or no? This is all part of the game.
It's all part of the game. It's what you do when the IPO market and the M&A markets are slow, as they've been really for the last several years.
Yeah.
So it happens, but you don't like it to happen, but it's okay.
But and I guess also when you have equity markets lower and a lot of uncertainty, maybe locking up that money for that one isn't a bad idea.
Yeah.
At the end of the day. All right, much more coming up in the next hour of Bloomberg Intelligence. We're going to break down the market, of course, look ahead to the Fed and what to expect there. Nancy Tengler is going to be joining us. She's always one of the best. We're going to break down what her top stocks are right now. Taking a look at the equity market, you have the S&P up by 0.5%, but honestly nothing to write home about. All right, if you want to listen to radio in the U.S., go to channel 121. It is sponsored by Oracle. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Fed Day. Happy Wednesday. Alex Steele here alongside Paul Sweeney. Welcome to Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence. Folks, we got a great lineup for you. Jeffrey Cleveland, chief economist at Payden & Regal, will be joining us. His outlook on the economy and the Fed meeting later on today. Todd Gillespie is Bloomberg News finance reporter on Morgan Stanley cutting 2,000 jobs. And Erica Edelberg is Bloomberg Intelligence chief mortgage-backed security strategist. Her take on the housing market and mortgage rates, increasing for the first time in 9 weeks. And Nancy Tengler of Lafler Tengler Investments always has really good calls on stocks. We'll talk to her later on in the hour. But let's get you all caught up here with the Bloomberg Business Flash. And for that, we go to Charlie Pellet. No,
okay,
you're John
you want to
Tucker.
try that again? How
John
long have we
Tucker.
known each other? And I'm sitting right next to her.
Well, okay.
It's
At
muscle memory.
first, I went right, and I was like, wait, no, Isabel's
No.
not doing Bloomberg
No.
Business Flash, and then I just went to muscle memory, man.
So the question is, where's Helen? I'm guessing on some crazy.
No,
he doesn't come on till noon.
I'm not
Oh,
filling
okay.
in for it. He's not supposed to be here.
Um,
I'm supposed to be
but
here.
I
We're
mean,
all good here, people.
I love you.
John
Oh,
Tucker,
Business
bring it on.
Flash, John
all right,
Tucker.
let's just forget. Let's move on. Stock indexes are rising. Wall Street's waiting to hear what the Fed, of course, has to say this afternoon. Virtually all Wall Street expecting the Fed to announce no change to its main interest rate. NVIDIA, among the most active right now, it is up 1%. Tesla shares also among the most active, up 2.7%, following two straight losses of roughly 5%. General Mills cutting the financial forecast for revenue and profit for the full year, partly because it expects macroeconomic uncertainty to continue to affect its customers. With the recent sell-off in the NASDAQ 100 still in correction, Sebastian Page at T. Rowe Price says no reason for investors to panic here.
Markets is selling off, but it's not just because of tariff headlines. It's because of the growth slowdown. It's because we had extremely high valuations going into this. And yes, the word of the hour, uncertainty. So it's a combination of all these things, but I don't think we're getting a recession.
Right now, the S&P 500, 30 points higher. That's up 0.5%. The Dow, 241 points. NASDAQ 100 is 118 points higher. The chief executives of more than a dozen oil companies delivering a message of gratitude, as well as caution. They're going to be with President Trump today. You know, the oil patch, I would imagine, higher prices go over a lot better than lower ones. And President Trump wants lower oil prices.
Yes. One and one here does not necessarily equal 6.
Okay. Maybe a sign of the times. Danimer Scientific, I've never heard of them either. They filed for bankruptcy with plans to market their assets for sale. They're going to wind down the business. They say they make the biodegradable straw. So I guess now.
Oh, God, I hate those things.
Yeah.
It's like you take
Well,
one
you
sip
are the
and then-
reason, young lady, that this company's going out of
Well, I'd much
business.
rather do like the steel ones or whatever, the metal ones. It's like you take a sip and then it falls apart. Charlie.
Anyway, we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, Bloomberg Radio.
John Tucker, it is Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some stocks on the move today. We're joined by Bloomberg's Isabel Lee.
I'm looking at Boeing. We have shares up by almost 7%, rising the most in 7 weeks. So we have the CFO, Brian West, saying that Boeing's cash flows are likely to be smaller than forecast this quarter. So that's as the playmaker really just continues to stabilize the work in its factories and clear out inventory of its already built jets. So the cash burn in the first 3 months could be, quote, in the hundreds of millions of dollars better than expected. So that's really
hundreds of millions of dollars
better than expected.
Hundreds of millions.
Hundreds of millions.
Better than
Yes.
expected.
It's all
obligation,
about
so.
the delivery of the
Yes.
737 jet.
o'clock.
That generates the cash flow.
Exactly. They call
Almost
it the cash
lunchtime.
cow, and that's been capped by federal
I will
regulators.
try
but
to
he
get
said
back
it's,
on
quote, going pretty well. So
this
lots of good
afternoon
news.
for
He said
the,
that the factory, quote, looks fantastic. And
for the
Boeing
Fed's,
really just had a tough time.
interest
The litany
rates.
goes on all the
Today is
ordeals that went
interest
through
rate
last
day.
year. So this is
See
really
how
a
much
sign of
will
recovery and progress for the
the
company.
Fed
So you can
cut
see
interest
investors
rate. That
Inch
depends
by
on
inch. All right, how about super micro?
their views on
Inch by-
how they're
Shares are
containing
also edging higher by
inflation here,
3%.
which
They announced a new optimized storage server for high performance software-defined storage workloads. They're basically using NVIDIA-based CPU superchip, and this is a new partnership.
Happy
Series
Wednesday.
C Supermicro shares
Happy trading.
edging
and,
higher. NVIDIA's Rob Davis says that the new storage servers
see you
allows
soon.
customers to benefit from innovations while using less power. And I think this is it. Like, amid all of the advances of AI, the next question is how much power will it use? And that's going to be a huge energy cost also.
When I was talking